We will try to answer the most important question on the minds of many, many millions of people right now, and that is who is going to be the president of the United States. And so far, the Trump media and technology stock has failed to break out, and that could mean no presidency for Donald Trump. Stocks could continue correcting into December, and the junk debt has signaled that possibility a while back. And finally, I think we're seeing that correction. South Korea ETF is actually near the bear market already, and this is happening on Ukraine escalation as North Korean troops head into the conflict zone in Ukraine. Will gold finally feel the dollar strength? Dollar has been under, it's been gaining strongly, and gold has so far not really reacted. Maybe now is the time for it to do so. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, November 1st, 2024. Please don't forget to hit the like button, subscribe to the channel, share this video, ask any questions that you like. If you're a subscriber, stay tuned. We'll be covering quite a bit of various securities, namely market breadth, interest rates and treasury bonds, as well as various ETFs, large cap stocks, speculative securities, as well as gold related will be covered in the members only section. There is a link in the description where you can go to my website and sign up for the indicators that I'm using. These indicators, this green, blue, red, and yellow line, as well as for my daily alerts and weekly videos. All right, so we're currently looking at probably the most important stock that is being analyzed by pretty much everybody under the sun, and it is it's not Dow Jones, it's DJT, Trump Media and Technology Group. So notice the sheer volume of this stock. 75 million shares have traded hands. That is just giant. It is actually more than shares of S&P 500 ETF SPY, albeit SPY is significantly 10 times more expensive, if not more. So DJT, Trump Media and Technology Group, I have gone over this chart already, but I will go over it again, and let's kind of rewind first back to let's say April 2024, where finally we can see this close below the yellow line. In my definition of an downtrend for a stock, that would imply a beginning of a downtrend. So the downtrend for this security, technically speaking, started back in April of 2024. That means a few months ago of this year. Notice this big rally from April into May. However, notice what happened. It got stopped exactly at this blue support resistance line. So notice on the 1st of May, on 9th, 10th, 13th, 14th, 15th of May, and yet again on the 31st of May, there were attempts to break above this blue support resistance line. And if it was successful, if it closed above this level, we would have said that now this security, Donald Trump Media and Technology Group, is in an uptrend. However, it did not occur. Okay, so that means we had resistance at this level, at this blue support resistance line. Again, you can find out more about these indicators by going to the description of the video. But what these indicators are doing, they're showing strong support and resistance levels. And you can see that in this case, it was very meaningful level. Okay, so this meaningful level was held. And then it rolled over, and notice this close below this red support resistance line on the 14th of June. That was the first time it happened. That was a signal to sell it short. Another time we had two signals right there on the 28th and again on the, 27th and 28th of June. Another signal. And yet another signal right there on the 16th and 17th of July. How do I know it's a signal? It means if it's a security in a downtrend, and in this case, yes, it is in a downtrend because we had a close below the yellow line here in April of this year, then we see a low below the red line and a high above the red line and then a close below the red line. That's a signal for us to sell it. So we had three signals back here as late as July of this year, and then the stock collapsed. So it went from 37 all the way down to $12. Okay, so that's a significant collapse. On the 24th of September, it bottomed, and there was a V-shaped reversal. So it started rising very strongly. Again, notice what happened. We once again got to this blue support resistance line, just like what we did before. Okay, I'm not doing anything different. There is the resistance at the blue support resistance line back in April, May, June. In May and June of this year, 2024. And yet again, we just had the same exact issue. Notice that on 29th of October, Tuesday of this week, the price came up to this blue support resistance line, touched it, but failed to get above it. Okay, so far we see a failure to get into a new uptrend. And immediately the stock bounced off of it and collapsed, giving us another signal to sell this security short. So there it is on the 31st of October. We see a close below this red support resistance line, and that's an actual signal to sell it short. I went ahead and I bought puts. I bought puts on this security, DJT, today. So the puts, okay, so for people who don't really trade stock options, when I'm buying puts, I am expressing my bearish bias. I'm expressing my opinion that the security will continue lower. So in this case, I went ahead and I bought puts on the security. It's currently at about $32 or so. My puts, or my contracts saying that the security will continue lower, expire in January of this year, and the strike price at which my put would become worth it is $14. So currently it's at $30 or so, but my put strike price is 14. So I'm basically saying that we're going to continue lower and at the very least retest this yellow line, but most likely continue lower and retest the lows from September. Okay, additionally, if we make a case, or we extrapolate our thinking, and we're saying that so far this security, Trump Media and Technology Group, failed to break out right next to the election date. Okay, we're very close to the election date. We have 2 trading days, literally. We have Monday and Tuesday is already election. So possibly Tuesday into close, maybe Wednesday morning, for the security to either turn around or collapse. Okay, my bet currently is it is going to continue lower, hopefully strongly and fastly, because, you know, if you ever traded options, you know that there is something called theta, Theta, theta decay, time decay. So the longer you hold the option, the more it becomes less valuable. All right, so we will see very soon what's going to happen to the security. Now, if you ever traded options, you will know that if you are buying calls or buying puts, so if you're buying calls, you're expressing your opinion that the security will go up. If you're buying puts, you're expressing your opinion the security will go down. Notice that I'm not talking about selling puts or selling calls. Okay, when you're owning when you own a put or a call, there is a limited amount of liability. Like, you cannot lose more than you have paid. So let's just say, pretend that this security, this option cost $100. I don't remember exactly how much it cost, but this option cost $100. If it continues, if this security like all of a sudden skyrockets and Donald Trump is elected president, then I will lose only how much I paid. Okay, this is the premium that I paid, how much I paid for the option. However, if instead of buying puts you sold calls, right, there is unlimited liability, how much you can be liable for. And this has happened in the past, and it actually several hedge funds went bankrupt when there was a run-up for, I believe, AMC or not AMC, but GameStop run-up. So there was a huge spike of price, and many of the people who, I believe, they sold puts instead of, I don't remember exactly what they did. They either sold puts or sold calls instead of buying puts, right? So they sold calls instead of buying puts, and GameStop went up, and they were just ruined. But in my case, I am buying the actual option, so my limited liability is if it goes to zero, well, I will lose however much I paid for the options. However, there is no limit to the upside. Like, if it collapses to, let's say, $1, this option would probably like more than quadruple, maybe even more. Let's say it breaks below this low of $12 or so, and it's currently at 31. That means that it would have moved like 200%. The security would have moved 200%. And options usually move 3 to 10 times the security. So we'll see again where this takes us, but for now I am predicting that this security, the Trump Media and Technology, will continue lower, and by extension there is a very high probability of Donald Trump not becoming the next president of the United States. This is purely based on the analysis of this stock. I have no opinions about the polls or anything of that nature, like fraud or anything of that nature, election fraud. I have no idea about this. I'm purely looking from a point of view of the trading of this security. It is, we have this ticker symbol, so we might as well use it. So this is the analysis as of right now. Let me know what you guys think in the description. So who you're voting for, or other, I'm not sure if it's legal to even ask that, but let's just say, what are your odds of each candidate winning? Make a comment. What do you think about the analysis? What do you think about this play of buying put options to play this setup? All right, looking at S&P 500 currently, so we have made a new record here on the 17th of October. And then a few days later, I said several times that there's a chance we're seeing resistance right there, particularly on the Friday, October 25th. I think that was the resistance reaffirming itself. So basically, we had made a new record right there on the 17th of October, kind of pulled back, attempted to make new records, but on the 25th of October, we tried to get up there, but then failed, and we have formed what's called a shooting star candlestick. So It has a red body, the close is below the open, and there is a shadow out of the top, and it's a longish shadow. So that means that we have tried to get up, but we failed. Additionally, we had another shooting star-like candlestick right there on the 30th of October, and then we gapped down yesterday on Thursday. So far, we have not been able to recapture even this gap between the 30th and 31st of October. So for now, looks like we're going to at least continue towards this green support resistance line, which is just a few percentage points away. Not even. It's probably less than 1% away. Oh, it's exactly 2% away. So most likely, I'm fairly certain we're going to hit at the very least this green support resistance line, which is at a level of 5,621, or 2% away from today's prices. I think this is happening because I was looking also at high yield bonds. So very briefly, I wanted to show high yield bonds and why they are important. Here's JNK, junk debt, on the weekly chart, and down below here we have what's called a correlation coefficient. So how tightly does the high yield bond correlate to S&P 500? And the S&P 500 and high yield bonds correlate highly. It means they're doing pretty much the same thing. Okay, so based on that assumption, I was looking at high yield bonds, which peaked on the 19th of September. However, S&P 500 peaked much later. It peaked on the 17th of October, so almost a month later. Okay, notice what happened. There is 17th of September peak for high yield bonds. Okay, and since then there was no new high, which is kind of continued lower and slid lower and lower and lower. So this is what's called a bearish divergence. We have high yield bonds moving lower, S&P 500 moving higher. Okay, now looks like we're finally seeing this divergence play out, whereas high yield bonds are, I guess, pulling S&P 500 lower. So S&P 500 is joining high yield bonds in a at the very least, short-term downtrend. Okay, so very short-term, there's still a downtrend for there's a high yield bonds. The short-term downtrend started here on 19th of September. We're continuing lower. So I'm looking at it from that point of view, and it looks like we're going to continue seeing further weakness for S&P 500 at the very least into mid-November. Possibly, we're most likely going to see strong volatility spikes Tuesday, Wednesday around the election time. How high, how strong are those volatility spikes? Impossible to predict. But for now, the short term, I think we will at least hit this green support resistance line, which is 2% away. Longer term, it's very possible we will hit this blue support resistance line, which is currently about 7% away. And at that point, if we hit the blue line, we would consider buying it, because notice what happened before. So for example, previous very good signal was back in November of last year, and wonderful signal. Basically we moved below the blue line, then we closed above it, and we just took off. So the same thing more or less happened back in April of 2023. We broke out above the blue line, continued higher, etc. So this is what I'm predicting for the next few days to weeks. So most likely we'll see weakness at the very least into mid-November, with volatility spikes, obviously, as I just described. All right, a little bit of world news as they are reflected in the stock markets of various countries. So here we're looking at South Korea. Let me remind you once again that the Korean War in the 1950s ended not with a peace treaty, but with an armistice, with a stop of fighting, basically. So technically speaking, North Korea and South Korea are still in a state of war. So right now we're seeing very belligerent North Korea, most likely protected by their sponsor state China, doing all kinds of dangerous stuff. So as you may have heard, North Korea recently tested a ICBM-like device, a rocket that can indeed reach the United States. A nuclear explosion over the United States would be quite devastating, obviously, and of all the places they would come from would be North Korea. I mean, I'm hoping that the United States would be able to knock those rockets down over the Pacific, but you never know, right? Maybe something will still get through, so it would be very devastating. But I think even more immediate for the North Korea, and it's for South Korea. And so what's happening right now is that you can see that of all of the various ETFs that I follow, South Korea is one of the weakest. Maybe there is a few more in Latin America, but South Korea has been really, especially like here from September into now, under severe pressure. And here's what's happening as well. Notice the way the indicators curved up. So now we're below the red line. So below the red line in my system would mean caution. Okay, so we have to caution means get ready to exit. Okay. The caution alert occurred right there on the 30th of October, this Wednesday of this week. And we're so close to a bear market. So if we close below this yellow support resistance line, it would imply a bear market for South Korean stocks, and we would consider selling them short on any bounce. Okay. Again, this is, I think, reflective of situation worldwide with North Korean troops now entering the Ukraine conflict as well. And I'm hearing even the way the media is portraying the Ukrainian conflict in Ukraine, the war in Ukraine, basically war of Ukrainian independence, is they're now saying it not as Ukraine war, but as the war. So North Korean troops have about to enter the war. So this is, definitely giving me goosebumps because it's freaking me out. This is sort of big deal because, again, I'm reading another thing. There is really no good way for NATO to respond. The North Korean troops have already been transferred to the front lines, or they're most likely about to start engaging with Ukrainian troops, but there is really not much the NATO could do. If the NATO decides to put troops in Ukraine, they would become fair game for the Russian and North Korean attacks, and that would further escalate the war. So what to do? I think the important thing is to arm Ukraine so that they can repel North Korean advances, basically. I mean, another option is to seek peace through some sort of concessions, but obviously this is going to be very painful for Ukraine. So politics aside, interesting to note this type of price action. We're seeing reaction, I guess, to North Korean belligerence in the price of South Korean stocks. This is ticker symbol EWY. All right, let's switch gears. We're currently looking at the dollar currency index, DXY. So dollar also bottomed out here in September and went on a huge tear, like big run. And it has again re-entered a new uptrend by closing above this blue support resistance line. We now have several signals that the dollar is in a new uptrend. So dollar is gaining against other currencies. If you trade forex, you could use it to your advantage. For example, if you trade euro versus US dollar, or US dollar Japanese, or British pound US dollar currency pairs, you can use this information, because it looks like dollar is now in an uptrend, so you want to be buying dollar with foreign currencies. But by extension, also a stronger dollar will weigh on things like gold, because notice the way it's expressed. It's XAU divided by USD. So if the bottom part of this equation gets bigger, it will pull this currency pair lower. However, despite this dollar strength, I mean, look at this dollar strength. Gold barely made any moves lower. I mean, it just continued to make new records. Is this finally now the time? So is this finally going to be the charm? Because like, it feels gold is super overextended. So a stronger dollar may finally weigh on gold, and the pullback could be. I mean, I think it's very likely has already started. So gold, what are we doing with gold? So notice this upward facing arrows. Basically, we're buying it on close above the blue line. Latest alert or opportunity to buy was back in February. It was a huge run up for gold. So now we're looking for a pullback towards the blue line. I'm not looking to buy up there by the green line. I want to buy around the blue line. Currently, that area of where I would consider even buying is around 10% down. So at around 2,500 would be a potential opportunity to buy gold at a relatively low risk level. Okay. So once again, is dollar gaining? Would dollar gaining in strength, make gold continue lower? Very good question. So far, it hasn't. But just looking at this chart, the way it's so overextended, I think we're gonna be seeing a correction pretty soon for gold. for gold. And that's it for this week's recap. If you have any questions, please let me know. Stay tuned on how to find me on the internet. Other than that, if you have, again, any questions, make any comments, like this video. Thank you for watching, and have another great trading week. All right, so here's how to find me on the internet. Go to MasterChartsTrading.com, click on sign up. I have 2 products and 1 bundle. So trading indicators are these lines on the chart, this green, blue, red, and yellow line, which you can use pretty much to trade anything under the sun. The indicators are available for TradingView.com, and there is my MasterCharts user ID on TradingView.com. So TradingView.com is the only place you can get my indicators. You need a free TradingView user ID that would look kind of like this. So open a TradingView user ID, just free account. And then once you do that, go to my site, Master Charts Trading, and sign up there. And once you do that, I will open the door for you on TradingView so that you can see the same indicators. Like I'm seeing them on my chart, you will see on them on your chart as well. And if you are not able to contact me, because sometimes your emails, they would sometimes go to spam. Like if I reply to your email, sometimes they would go to spam. So if that happens, definitely send me a message right there where I'm hovering on TradingView.com. Newsletter. So I send out daily alerts about various securities that we cover. So for example, this week we'll cover market breadth, interest rates, various ETFs, large cap stocks, speculative securities, as well as gold related. On my site, I send out daily alerts. I send out weekly members only videos as well. And again, the best deal is to get both trading indicators and newsletters. We have two different styles of plans. One is yearly plan. If you pay up front, the equivalent price would be $49.95 per month for both indicators and newsletters. You can just get the indicators at $24.95 per month. If you want to do monthly, then you can subscribe at $29.95. Newsletter at $39.95, and the indicators and newsletter together at $59.95 per month. You always get free 7-day trial. You have chance to cancel if you don't like. All right, that's it for this week's recap. Please let me know if you have any questions. Thank you for watching and have another great trading week. Bye-bye.